Well, hello there. How are you? Thank you so much for stopping by my YouTube channel. My name is Dr. Cozette M, America's #1 tax and accounting strategist. I work with CEOs to help them grow their firm, double their bottom line, help them look at some of the key performance indicators, as well as do some break-even analysis and other strategic tasks that I work with my clients. Now, I am America's #1 tax professional. So today I am going to be talking to you guys about some of the things that you can do and cannot do when it comes to itemizing. This week, I have had a number of supplemental forms included with my clients' tax package as it relates to itemized deductions, but a lot of them were not eligible to go into the return. So let's have a conversation. What is eligible to be written off as an itemized deduction? All right, we're going to jump right into that. So this form, this sheet that I have here in front of me is from one of my clients. And I'm just going to go through her list of things that she actually put on here for me to write off in her return. And I'm going to tell you the pros, the cons, what we can do and what we cannot do. All right. So first of all, she has life insurance premium. Life insurance is not a deductible on our individual return. Life insurance is not considered an ordinary or necessary expense to the Internal Revenue Service. Therefore, we cannot include this in our medical expenses when we talk about itemized deductions. What we can include are our premiums that we pay for insurance policies. We can include our co-payments that we pay. And when I say premiums, guys, let me be clear. If you are an employee and your employer deducts medical insurance from your check and they do it on a pre-tax basis, you cannot write off the copay or the premium, shall I say. The copays are what you pay to the facility, to the doctor's office when you go there for any type of treatment. Those are a deduction. Eyeglasses, chiropractor, orthodontist, dentist, those are all medical, dental, vision related expenses that we as a taxpayer are eligible to write off. But when we think about things such as cosmetic surgery, no, we cannot write those types of things off. Okay. Her next thing is medical expenses. Now, while we're on the subject, for her case, she cannot write these off or take advantage of them, is the correct way to put it, because we take the greater of your standard deduction or the total of your itemized deductions. In her case, she is filing she's filing head of household. So her standard deduction for this year is $19,400. So if her itemized deductions do not exceed that number, then it's better and beneficial for her to take that standard deduction. So she has on here cell phone. Cell phone is an employee or an employer related expense. In her case, because she doesn't itemize, there's no way we can use Form 2106 to include her unreimbursed employer related expenses. Now, if she was itemizing, we would be able to include the expenses that her employer did not reimburse her for. Okay, anything that she incurred that relates specifically to her job, we would be in a position to write those off for tax year 21. That was not the same for 20 or 19, okay? So we're talking about tax year 21 today specifically, you guys. All right, and if you're just joining me, I'm Dr. Cozette M. I appreciate you coming to my channel. We are talking about itemized deductions. While you're thinking about it, please make sure that you hit the share button, share with your colleagues, share with your siblings, share with your parents, share this information. I want this to get out there so that everybody knows these things happen too frequently, okay? Thank you guys. So expenses such as donations, etc. We as taxpayers can donate to 501c3s. Okay. But when we donate to those 501c3s, we need to ensure, number one, that they are a legitimate legal 501c3. And then we need to make sure that we get a receipt in order to start there and, make sure that we have the backup to support everything that goes into our return. But in this case, she's not going to be able to write off any donations. Why? Because she's not itemizing. She's picking up the standard deduction for head of household, which is $19,400 for tax year 2021. All right. Now, she also has on here CDs. Now, we cannot write off for certificate of deposits for any of you who are not thinking that way. We cannot write off the cost of purchasing a certificate of deposit. But what we would be able to do is if we accrued any interest, then we will be writing off the interest as income. But in her case, and in any case, the cost to acquire a certificate of deposit, we cannot write off that expense to acquire a CD, okay? Only the interest when we pull that out, when we cash out on it. All right, so hopefully this has been some good information for you guys. Other things that would be eligible to go on the Schedule A when you itemize, of course, is taxes. We're talking about your personal property taxes, such as your registration of your vehicle. We're talking about the real estate taxes. And keep in mind that particular category, there is a cap of $10,000 that you can write off in taxes. And when we think about our medical, in which we just discussed, the first 7.5% of your adjusted gross income is not eligible. Anything above and beyond that 7.5% of your AGI, then it kicks in. So a lot of times taxpayers don't benefit unless they have an enormous amount of bills, and in conjunction, the AGI or the adjusted gross income is low for the year. Okay, we have our interest, which is typically our mortgage interest, our points, our mortgage insurance premium. All of that goes into the interest column, okay, or category or bucket. We have charity, which I discussed previously. We have the casualty, thefts, and losses. And that could be maybe you had a fire at your home and the insurance portion picked up some of it. The rest of it, you're going to itemize and pick that up on your itemized Schedule A. Maybe your car was vandalized. Maybe your car was burglarized and you didn't get the full compensation or full value from the internal revenue, or excuse me, from the insurance agency. Then you would be able to put that on your return. Okay. But rather than go into the full details of this, what I'm going to say is make sure you keep thorough records with everything that you do. Okay. We have our miscellaneous other category, things such as gambling losses to offset the expenses or the income that you brought in. You can do that, and other investment opportunities are available to you with the other miscellaneous category. Okay. So hopefully, like I said, that helped. I've been seeing too many of these cross my desk this week. So I was like, let me stop, let me educate, empower, and inspire the people to get ready for their, as you guys are getting ready for your tax appointments. You want to make sure that you're ready, you're providing your preparer with the correct documents and not just kind of like tossing them in their lap and hoping that they get it right. Okay. Because if they're like me, they're going to analyze every sheet of paper that goes through their desk. All right. So listen, guys, you can follow me on all social media outlets at Cozette M. White. That's Instagram, Facebook, LinkedIn, Clubhouse, most of the major platforms. I'm there as a presence, giving you guys the information that you need, the resources and the tools. All right. Make sure you subscribe to my channel. That's the only way you're going to hear about me, hear from me, hear this kind of information is by subscribing to the channel. Make sure you share this with your friends. All right. In the meantime, leave a comment, leave a question, Let me know how I did, what you guys want to hear, and I'll catch you on my next YouTube. Okay. You guys have yourselves an awesome and amazing day. I cannot wait to connect with you next time. Bye bye.